Hello, everyone, and thanks for finding the time and joining this webinar. This is Gisela, and I'm in charge of strategic partnerships at HyperSKU. And we're inviting our partners in the finance sectors to review how the finance excellence can actually grow your e-commerce business. We invite like 5 speakers, and each of them have 15 minutes to share and also 5 minutes to have a Q&A sections. And in the final 20 minutes, we will have a panel discussion with all speakers. Okay, so the first speaker we're inviting is from Juni. And actually, Juni is from Gothenburg, Sweden in 2020, which is aimed to be the financial companion to the e-commerce merchants. And Juni, they've been listed as the fastest growing fintech startup in 2021. And we're inviting Ruben to share with us how go beyond forecasting and cash flow hack to 10 times your company.
Perfect. Juni, thank you very much. Thank you, Gisela. And thank you very much, HyperSKU, for hosting this. Thank you very much for the kind words. My name is Ruben Arnbert. I'm the VP Finance at Juni, so I head up the finance and strategy function, and I have over 15 years of experience within not only the finance sector, but also e-commerce and running multiple e-commerce businesses. So what we will spend the next 15 minutes on is talking about the financial hacks that we used in not only our e-commerce businesses prior to Juni, but also what we're seeing our e-com business customers use to 10x their performance. So I will share some presentation materials, so please bear with me for a few seconds while I project my screen. Gisela, you've disabled the screen sharing. Perfect, here we go. Right, so as we mentioned, the title of this webinar is Cashflow Hacks to 10x Your Company. And I just wanted to illustrate what we're talking about when we say 10x your company. So what we've plotted on this chart is actually 3 separate years in the existence of one of my e-com stores before Juni. And the blue line is the performance of gross profit at the worst point of our company's history. And the red point is the 10x performance that we gained after we did these 3 things. And the 3 things that we did was to focus purely on cash flow and working capital. And we focused on the following 3 aspects. Number 1, maximizing our working capital. That turned into 3 to 5x improvement, not only in cash flow, but also performance. Number 2, a deep focus on unit economics and speed. And the third one, that we took on additional debt at moderate levels to really accelerate the cash flow profile and growth of the business. And what we'll do throughout this presentation is to walk through each of these 3 topics and what we did specifically in order to unlock that additional cash flow and thus that additional growth. So let's start with jumping into the first topic that we did when we ran our e-commerce stores, and that is to maximize working capital. And when we say working capital, all we're talking about is your business liquidity. We're talking about the cash that you use on a day-to-day basis to run your business. And specifically, we're talking about 3 aspects which make up working capital. The first one is accounts payable, which you can see on the top left. That's simply the money that you are due to your suppliers. The second one is inventory, because we were in inventory holding e-com. So if you're a dropshipper, this applies slightly less, but still very, very important, i.e. how long you're holding inventory and how much, what the inventory holding cycle is for that. The third one is accounts receivable, i.e. how long it takes for your sales to translate into cash on your bank account. And obviously, an increase in accounts payable, longer payment terms of your supplier, is good for liquidity. An increase in inventory held is obviously bad for liquidity. And accounts receivable, an increase, i.e. it takes longer for you to receive the cash, is also bad for liquidity. So what we did was very, very, very simply. First off, talk to your suppliers. negotiate longer payment terms with them. That's number one. Number two, hold inventory for a shorter time. How did we do that? Remove the non-performing SKUs. Be bold, take off the ones which are dragging that inventory days metric for too long. Third one, reduce time from sale to cash. And the easiest way to do that and to unlock the cash that maybe PayPal is holding or Shopify is holding is to either use credit, or if you're able to get to an account rep and manage it that way. But obviously, famous with PayPal, that's very, very difficult. So these were the three things that we did in order to maximize working capital. So let's have a look at them in turn. So first off, negotiate longer payment terms with suppliers. Very, very simply. We started out with being on 1+10 terms with our suppliers. So we paid our supplier in day 10. Typically made sales around day 2 to 3. And at day 7, at that point, is when Shopify released the cash and it landed in our bank account, or PayPal if we use that as a payments processor. So in order to squeeze in another sales cycle, what we did was negotiate very, very hard with the suppliers, called them up, chased them, made sure that we could extend that to say 20 days. And by extending that cycle, we could then get one more sales cycle in and reinvest those additional proceeds one more time. And what we did initially was also focus on negotiating different tiers. So if your supplier says a blanket no, or that no, these are the payment terms that we use for all of our customers, you can talk about we negotiated volume discounts so that at certain volumes we could pay at certain terms. So this is number one when it comes to maximizing working capital, and that additional capital, being able to reinvest that into the business earlier, really unlocked probably 3 to 5x of additional growth for us. Number two, let's do another example, right? Another example where we look at inventory and accounts receivable, right? And let's assume that we're a store who sells mattresses, and we buy these mattresses from a supplier, we hold them in stock and sell them to customers on Shopify. And here we've spoken about the accounts payable concept. And if you look at inventory, same thing. Cut out the non-performing SKUs, reduce that inventory days from 10 to 5, and also use credit or alternative ways of converting that sales into cash. And the way we did that to overcome that 7-day window where Shopify paid us was to take out credit against those receivables. And we'll get into credit later on in the presentation as another method of boosting that cash flow. Okay, so that was basically the three aspects that we looked at. Very, very basic, very, very fundamental. When we looked to maximize working capital or day-to-day liquidity. And it really makes a huge difference in unlocking that additional cash that you need to throw that new sales cycle in. Okay, so that was the first topic that we focused on in that year when we went from 1x performance to 10x performance, maximizing our working capital profile. And we did that through negotiating with our suppliers, reducing the inventory days, and taking out credit against the account receivables. So three very common methods, but also very, very powerful once you get them right. So then let's look at the second aspect that we did. And that was having a very, very deep focus on our unit economics. And just so that we're all on the same page, when I talk about unit economics, I talk about the profits that we make either per unit sold or per user or customer which enters the platform. And I'm sure that many of you are familiar with the following graph, but put very, very simply, if you look at a recurring business model, then you will spend customer acquisition cost or marketing euros or dollars to acquire your customers. That's when you're in the black negative cash flow area to the left. We haven't made any money yet. We've spent our marketing on Google Ads, Facebook Ads, whatever your preferred acquisition channel is, the customer starts purchasing from your store, and hopefully you will reach a payback on that marketing spend and turn a profit, i.e. enter into the blue or slightly purplish area on the right-hand side and turn a profit per customer. And obviously having positive unit economics is crucial in order to scale, because if we don't make a profit per unit or a profit per customer, it doesn't matter whether you have 20 million customers or one, you will never be profitable. All right, so unit economics, we've agreed on a simple definition for the purposes of this webinar. Right, so once again, very basic, but we segmented our entire customer base into profitability, basic, gold, and platinum. And we did that by looking at average order values and the different acquisition channels that we've used to acquire each of those cohorts. And we came to the conclusion that when we split our customer base into three, depending on how much they spent, they obviously had very different return profiles. So at the very top, you can see that what we called basic customers basically more or less returned the advertising spend, more or less. Gold customers, on the other hand, 19 times, and platinum 210. So huge difference in unit economics per customer. And obviously the distribution was skewed towards the basic customers. But this type of analysis not only allows you to put a focus on, for example, the SKUs that are profitable and the customers who bring the most benefits to you, but it also has huge operational implications. And what I mean by that is if you look at the second row, we also calculated, okay, well, take an extreme example. What would happen if all of our customers were basic customers where we only made a 1x LTV CAC or 1x ROI? Well, obviously we would need 2,800 customers open to break even. And the reason this analysis becomes important is because it has operational implications on your business as well. Because in order to break even, now you need not only a huge amount of additional volume in terms of 2,800 customers versus 19, if all of your customers were platinum, but also an additional operational burden. You need to serve all of these customers, not to mention the inventory turnover for that amount of customers. Okay, so unit economics is important to boost your cash flow because it allows you to focus on the customer segments and the SKUs, which you benefit the most from. Okay, clear. Another aspect which becomes even more important with unit economics is if you combine it with speed. What do I mean by that? Well, let's use a very simple example. Let's take two scenarios. Let's look at the top one first. And let's say that we have a customer where we spent 10 to acquire it. So we went out, spent 10 on a Facebook ad, one customer, and we got one customer in return. That customer then spends 10 in month 2 and then 10 in month 3. So we made an ROI of 2x, right? We got 20 in and we paid 10. If you look at an IRR, or the average return on that stream of cash flows, that's 62%. Okay, let's compare this with a second scenario. In the second scenario at the bottom, you have the same ROI, 2x. You spend 10 and the customer generates 10 and 10 for you back. So you make 2x. But you have 1 month delay before the customer starts spending. So now you've made the same amount of cash flow, but over 1 additional month, which means that obviously the average return over that time period has gone down, and it's gone down by almost half, from 62% to 32%. And this is what highly successful businesses do. They're able to not only focus on the high unit economics customers, because they have a higher profit, so they get more cash in per customer, but they also reinvest it into the business earlier. And by doing that, they get a higher return, and they also create this type of exponential growth. So by unlocking that cash and combining it with speed, you're able to create this compound effect. Okay, so now we've gone through number 1, and number 2. So we've talked about working capital, how we can talk with our suppliers to make sure that we get better payment terms, which allows us to get one more sales cycle in, how we can reduce the inventory days by making sure that we focus on the high performing SKUs. We can also make sure that we take out credit to minimize that lag when some of the bigger platforms are paying out the cash from your sales to you. Now let's look at the third enabler to get more cash flow into the business, increasing the return and 10xing your company. Okay, the third one is to use leverage or debt. Let's use a very, very simple example. Let's say that I invest 100 and I get 150 back, right? That means I've made 1.5 times more money, 1.5x. Let's take the same example. We invest 100 and we get 150 back, but we fund that 100 of money that we put in with 50 of debt. So we only put in 50, the rest come from debt. We still make 150, we repay the debt, and now we boosted the return to 2x. And this is how a moderate amount of debt in your business not only amplifies the return on your equity that you've put into the business, but obviously it also helps with things like working capital, like we mentioned in the first example, right? So that is how introducing moderate amounts of debt, particularly in combination with aspects of working capital, really, really unlocks that additional cash flow. So these were the 3 things that we did, and this was before I joined Juni, but this still holds true when we speak to our e-commerce customers today at Juni. And then these were the 3 things that we managed to get right in that 1 year where we managed to be on the red line rather than on the purple line. And that's what made or broke that business, that optimization, that additional cash flow. Right, so before we finish, I mentioned that I'm from a company called Juni. And what we do is we aim to be the financial companion for e-commerce. So what that means is that we're the only bank in the world solely built for e-commerce and solely built to be a tool to solve these types of problems that we've just outlined. So being able to give you a holistic overview of your finances, all your cash flows in one place, so that you can draw these types of conclusions faster than what I did when I downloaded 9 different Excel sheets to make sense of it all. Okay, I just want to say thank you very much for having me. And if you have any questions or want to follow up, here's my email address at the end, but otherwise I will pause here and say thank you very much.
For your presentation. This is really a key issue, cash flow, cash flow for online sellers, because what we see is somebody wants to start with drop shipping, particularly they are scaling, they get more orders, but actually the cash is stuck. So they have issues with paying off the supplier and all these kind of things. I think you guys are coming from the same background because the founders were also in e-commerce, right? How did you guys come to this business idea?
Exactly. So our founders were e-commerce and drop shippers themselves, and they were frustrated that there was no solution for them to understand how to optimize their finances. So exactly what you're describing. So they did everything manually, and they spent 50% of their time doing that instead of selling. And awesome. They hated that. So that's why they came up with Juni.
Cool. It's a brilliant idea. So for if anyone has any questions, you can use the Q&A, click the Q&A button so we can keep track of the questions also later. So this is recorded, so it will be published also on YouTube later. So therefore, make use of the email address that Ruben left here in the system in this presentation. You will stay till the end, I think, for the panel discussion. If that's then we will wrap up as well with you. For do you have anything to give away already? Because I saw that if somebody gets a Juni card, they also get some kind of cash back, or how does it work? Is there some nice thing to give away to anyone listening to this this webinar?
Yes, absolutely. So if you join, you get 1% cashback for an unlimited time. So the Juni product is free. So you're actually getting paid to use it.
And you guys are growing rapidly, I saw, globally, and there's even a waiting list, but I'm not sure if I saw that correctly, because you're expanding too fast that you have to queue up to be able to join Juni, or is there a shortcut for that?
There's a shortcut. Just reach out to me and we'll set you up immediately.
Awesome. Thank you so much, Ruben. And let me check if there's any. I don't think there's any other questions at this moment. Otherwise, we will handle the questions. Gisela, you have a question.
Yes.
Good.
Okay, so one question for Ruben. Actually, I saw there's a clear roadmap on Juni site. Can you share any interesting feature you're going to launch in the near future?
Yes, so next up is a Shopify integration, which means that you can integrate all of your Shopify stores and all of the analytics into one place. And as some of you who might know Shopify, you can only see one store for login, for example. You can consolidate all of your stores in one place. So that's one very, very exciting feature coming up.
Okay, thank you.
Awesome. Thank you so much, Ruben. I see one question coming in. Are you planning to offer credit lines outside of the UK, asked by Adam?
Yes, we're planning on offering it within Europe at end of Q3, latest early Q4. So by September, October. And feel free to send me an email either right now or after this webinar, and I'll make sure that I put you in touch with the right people. Okay,
awesome. Another question is, could you give an example of the tracking tool you use? That was the last question. Then we go to the next speaker. Tracking of all kind of sounds hard to do for someone who's starting.
Yes, exactly. And what we use right now is Juni, because we haven't found a different tool to do it in a better way. So we integrate all of the bank accounts and all of the analytics into one platform.
Awesome. Very good. If you have any further questions, reach out to Ruben or ask them at the end. At the end, probably in about an hour, we have a Q&A section where you can just ask anything. For now, Ruben, thanks a lot.